Yeah, long term, the damage has been done already. So globally, we're seeing $100 billion cuts in capex for oil production outside, mostly outside the OPEC, particularly in the U.S. So long term, $30 we think now, or even 35, still not good enough. So the recent price collapse and the current price does have a long term damping impact on the shale industry. In the short term, there are the shut-ins because of lack of demand for the past month or two. So the recent optimism helps alleviate that the physical shut-ins a little bit. So rather than shutting more, you can do a bit less to give a little bit of momentum to the industry. But long-term decline in the production in the U.S. Long-term, I mean end of the year and towards the end of next year. That's what I mean by a bit long-term. That will continue until there is the whole world oil market returns to full normalization, perhaps in 2022 and 23 range.
Hi, Kang. It's Matt here in Singapore joining the conversation. Let's go to the demand side of the equation. Where is all of this so-called demand that we're hearing about for oil coming from? Is it the United States consumer going back, getting back on the road and driving as we see lockdowns ease? Because we should remember that a number of economies right around the world do still remain severely restricted.
Very good question, Matt. In terms of the cases, the still very bad is in Latin America, Middle East, and South Asia. But in developed countries, U.S. and OECD, Europe, the cases are stable. So U.S. is leading the recovery, leading the reopening of the economy state by state. And in the U.S., Germany, in Europe, Germany and Spain, they also start easing up the restrictions. Asia, Southeast Asian countries, even in India, inside the lockdowns, there are some kind of easing up of the restrictions. So the recovery is led by U.S. And May numbers so far suggest a huge rebound over April of the gasoline demand. Of course, April was really, really low. And this month, we are looking at somewhere between 1.5 to 2 million barrels per day higher gasoline demand in the U.S. over April. So globally, I mentioned earlier that 5 million barrels per day across the board, mainly gasoline is leading, more like a V shape for the recovery. Other products stay U shape. Gasoline, jet fuel is still very in the downside. But of course, I also want to mention that the rush to reopen the economy also increased the chance of a second wave hit of the coronavirus during the fall and the winter. So that's the chances of that is going up as well.